If you're a beginner investor looking to create a real estate portfolio, then this video is for you. My name is Anastasia Mwende, and I'm joined here with...
My name is Caroline Gakuya. Having been in the industry for half a decade and selling over 50 units worth of real estate, this would be the best advice we'd give to anybody who'd want to start off in their property portfolio journey, especially in Nairobi, Kenya.
Real estate remains one of the most reliable ways to create wealth in Kenya. Whether you're looking to create wealth through passive income, through short-term wealth, capital growth, for your future investments, if you play smart, then this is the way for you.
So, where should you start? What should you do to avoid unnecessary risk? And what should you do to scale up in real estate? This video will walk you through everything you need to know to start and grow your real estate portfolio in the Kenyan market.
First, educate yourself on the market. Know and understand the difference between residential and commercial and land. Residential, you'd find there's apartments, townhouses, maisonettes. If it's commercial, we're looking at offices, shops. If it is land, we're looking at agricultural land and serviced plots. Know local trends. Areas like Nairobi, Kiambu, Athi, Mombasa have different dynamics. Satellite towns are booming with affordable housing. But if you're looking for high return on investment, look at areas like Kileleshwa, Lavington, Westlands, and Kilimani. From the legal side, understand the land ownership laws. Know the difference between freehold title and leasehold title. Check on your title deed verification and zoning laws, more like how high the apartment can go.
Secondly, is you need to set clear investment goals. Are you investing for rental income or are you investing for capital appreciation? And by rental income, what I mean is, are you expecting to be getting monthly rental incomes from tenants, or are you buying this property so that you can hold on to it and sell it in future at a profit? You also need to think about your investment timelines. Are you investing for short term or are you investing for long term? For short term, this is where investors would buy a property and sell it in a few years at a very profitable price, which would go up to even 10 to 15% increments. Or you can buy a property now and decide to hold on to the property and watch it grow. Whether you decide to invest in short or long-term investments, this all depends with your investment tolerance. Are you willing to invest in off-plan projects where you'll have to wait for a couple of years for the project to complete? Or are you willing to go for the complete projects, which are now more expensive? Now that's up to you.
Start small, but be smart. You don't need millions to get started. You can start with affordable studios, you can do off-plan projects, or you can do group funding.
The fourth thing you need to do is secure your financing. You need to ask yourself, where are you getting your money from? Is it from personal savings? Is it from SACCOs, which are often more better than taking loans from banks? Is it from mortgages? Or is it from partnerships with people you trust? You need to know the pros and cons of each of these sources of finance.
Do your due diligence. This is where people go wrong. Don't skip this. Title search. Go to the land registry and then go to the site. Check the infrastructure and the potential for growth. Finally, vet the professionals you're working with. The agents and the developers, ensure that they are licensed and they are trusted professionals.
The sixth tip will be to diversify your property portfolio. Now, you've followed all the tips we've told you, and you've bought that first property, that studio apartment, or that one bedroom. So now what's the next step? Mix locations. Balance Nairobi properties with growing towns. In addition to that, you can decide to add different property types, which may entail commercial properties, which are offices and shops. You can decide to also do short-term rentals, which are Airbnbs, which are actually doing very well at the moment. You can also decide to invest in apartments in upcoming rural areas. Finally, reinvest your profits. Compound your returns by investing your rental incomes and capital gains to your next project so that you can continue growing your property portfolio.
Manage your properties well. A poorly managed property loses value very fast. Ensure you get a property manager, especially if you have several units or you're living abroad. If you don't have a manager, please reach out to us. Again, stay on top of your repairs. A happy tenant is a long-term tenant. Keep your financial records, especially your income, taxes, and expenses. That is very key.
Now, on to the last point. Stay updated and network. Believe it or not, your network is your net worth. You can join real estate forums, you can join real estate WhatsApp group, so that you can keep yourself updated with the new trends. And if you do not have any, you can click the link in the description box so that you can join ours.
I get it. This can be a lot to take in. If you're looking to build a real estate portfolio in Kenya, call or text the number on the screen. Thank you.